Welcome to the Pro Ticker Deep Dive. Today, we are diving deep into what is, well, arguably the most critical and expensive supply chain question of the decade.
The great semiconductor reshoring.
Exactly. For a few years now, Washington has been focused on this high-stakes, multi-billion-dollar effort to fundamentally re-engineer the entire industry and bring advanced chip production back to the U.S.
It's a fascinating story. Almost an exercise in industrial nostalgia, isn't it?
How so?
Well, the U.S. invented the chip. We still dominate the design, the software, all the intellectual property. But we watched the manufacturing part slide off a cliff.
And the scale of that decline is pretty shocking when you see the number.
It's staggering. Think about this. In 1990, the U.S. produced 40% of the world's chips.
40%.
By 2022, that number was scraping just 12%.
And it's not just about the volume, right? It's about who controls the absolute cutting edge.
That's the real problem. When we talk about advanced logic, the chips you need for AI, for high-performance computing, for modern defense systems, the concentration is just incredible.
You mean in Taiwan?
Taiwan controls over 2/3 of that global production.
Yeah.
So that imbalance, where our entire digital future depends on a single geopolitical hotspot, that is the core problem the U.S. is spending hundreds of billions to solve.
So that brings us to our mission for this deep dive. We're tackling the trillion-dollar question. Can the U.S. actually pull this off? Can we successfully rebuild this supply chain?
And, maybe more importantly, who wins? Among the three global titans, Intel, TSMC, or Samsung, who is best positioned to win this battle for American chip supremacy?
Because they're fighting for more than just government subsidies. This is for control of the next 3 decades of tech infrastructure.
Absolutely.
Okay, let's unpack this. We know the decline has been happening for a long time. So what was the tipping point? What finally forced Washington to act?
It was really two catastrophic shocks hitting at almost the same time.
The first being the pandemic.
The first was that massive wake-up call of economic fragility from COVID. When Asian manufacturing stalled, the chip shortage just exposed this critical weakness in the whole system.
I remember the headlines. The auto industry was crippled.
The data is so sobering. A lack of simple components paralyzed entire sectors. I mean, 2.3 million vehicles couldn't be built in 2021.
Just because of chip scarcity.
It's just from that. It was a direct, devastating hit to the economy.
And that economic shock was bad enough, but the second driver, national security, that made this feel existential.
Precisely. We're in a new era of strategic competition. You have China, which launched its very ambitious Made in China 2025 goal.
Right, aiming for 70% self-sufficiency.
So policymakers in the U.S. were forced to game out these worst-case scenarios.
Yeah.
What happens if there's a Taiwan blockade or an invasion?
The global economy stops.
Instantly crippled. The U.S. military is crippled. You have to remember, TSMC's fabs produce 90% of the world's most advanced AI chips.
So relying on one vulnerable choke point became just untenable.
Strategically untenable.
Yeah. And that led to the American response, the 2022 CHIPS and Science Act.
Which is this massive industrial policy experiment. I mean, we haven't seen anything on this scale in generations.
We're talking about $280 billion in total funding.
Yeah, for subsidies, R&D, tax breaks. The core of it, though, is about $52.7 billion specifically to incentivize domestic manufacturing.
And the goal is just to have another option, a second source on American soil.
A reliable, resilient second source outside of Asia. That's the idea.
But even as that was happening, the whole geopolitical game just accelerated. By late 2025, chips were being viewed by global powers as well as weapons.
That is the new reality.
Yeah.
You've seen the U.S. threaten 100% tariffs, and then you see immediate retaliation from rivals.
Like that Nexperia chip crisis in October 2025.
Exactly. Where export controls just triggered production stoppages for major automakers. Every policy move now is measured by its impact on who controls manufacturing.
And control equals influence. It's why everyone is sprinting to secure capacity, which, I mean, the market opportunity is just driving this on its own. Global chip sales hit $627 billion in 2024.
But that's just the starting line. The projection is that sales will cross the $1 trillion milestone by 2030.
$1 trillion.
And what's powering it, almost entirely, the explosive, just insatiable demand from AI. AI training, data centers, every tech titan needs more chips than they can possibly get their hands on.
And that pressure, plus the CHIPS Act, has created this investment tsunami. Over $540 billion in private investment pledged since the law passed.
That's committed capital. It's
Yeah.
not theoretical.
$500 billion in just a couple of years. It really does make the gold rush look like a yard sale.
And it's materializing as real projects. We're seeing, what, 244,000 high-tech manufacturing jobs pledged in 2024 alone.
So let's break down where the big federal awards are going, the three contenders.
Right. So Intel secured the largest package so far, $7.9 billion. A lot of that focused on their big Ohio project. TSMC got $6.6 billion for what they're doing in Arizona.
And Samsung.
Samsung's package for their Texas sites is still being finalized, but it's expected to be substantial. But even with the money flowing, the strategies and the risk profiles for these three companies could not be more different.
All right, so let's drill down on that. Let's start with the undisputed king, TSMC.
Taiwan Semiconductor Manufacturing Company. Yeah, they are the king of the pure-play foundry market.
And for anyone unfamiliar, a foundry is basically, what, the factory?
It's the factory that prints chips for everyone else, for companies like Apple, NVIDIA, AMD. They just do the manufacturing, not the design.
And their dominance is. Absolutely.
It is. They command a staggering 70.2% of the global foundry market as of Q2 2025.
70%.
And 75% of their revenue comes from the most advanced chips, 7 nanometer and below.
Which is the cutting edge. And their U.S. commitment is huge, you said. $165 billion in Arizona.
That's right. For 5 fabs, packaging, R&D, they're actually already in volume production for their 4 nanometer chips here. But
There's a but.
There's a but. If you read the tea leaves, this investment is decidedly grudging.
What makes you say grudging? They're taking billions in subsidies.
Because the economics are just terrible for them compared to home. Building a fab in the U.S. costs roughly double what it does in Taiwan.
Double? Wow.
Labor. Trade labor rates here are 4 to 5 times higher. And then once it's running, the operating costs are still 10 to 35% higher.
So their chairman has been pretty clear about this.
Very clear. He stated Taiwan will always keep the most advanced nodes. So analysts figure only about 30% of their future 2 nanometer output will ever come from Arizona.
So they're building this capacity defensively. It's risk mitigation for their big U.S. customers like Apple and NVIDIA.
Exactly. They're maximizing the subsidy while minimizing the strategic risk to their profitable Taiwanese operations. They're executing, but with limits.
Okay, let's pivot to Samsung. Distant second, 7.3% market share. Their Texas fab was sitting idle for a while. What was the turning point for them?
The turning point was one massive contract, the Tesla rescue.
The Tesla rescue.
Tesla signed a huge $16.5 billion multi-year contract for Samsung to produce their AI5 and AI6 chips at the Taylor, Texas plant.
And that one deal changed the whole narrative.
It completely stabilized them. It gave them the anchor customer they desperately needed. Now they're expecting to start 2 nanometer production there by late 2026.
So that validates their logic tech.
Okay.
But what's their real strategic advantage against a behemoth like TSMC?
Their advantage is in leveraging their dominance in memory, specifically high bandwidth memory, or HBM.
Which is critical for AI chips.
Absolutely critical. You cannot run an NVIDIA H100 without it. And Samsung recently passed NVIDIA's really tough qualification for HBM3E memory. That is a massive win against their main rival, SK Hynix.
So their play is to be the integrated superpower, bundle the memory with the foundry services.
A one-stop shop, exactly. They present a compelling alternative for big AI customers. They're the volatile recovery play.
Okay, finally, we have to talk about the American champion, Intel. The source material here paints a pretty grim picture. What are the key indicators of their struggles?
The numbers are just stark. I mean, they're bordering on an existential threat to their foundry ambitions.
How bad?
Intel Foundry reported a crushing $3 billion operating loss in Q2 2025 alone.
Just one quarter.
So they're tracking toward more than $13 billion in annual losses. They're burning through capital, but the revenue just isn't there yet.
And the most visible failure is that big Ohio megasite.
Yes, that was supposed to be the jewel in the crown. It's now delayed until 2030, maybe 2031. That's 6 years behind schedule.
Wow.
But the biggest failure, the most fundamental one, is commercial. They have not secured a single major external customer for their advanced 18A or 14A nodes.
And those are their cutting-edge technologies that are supposed to compete with TSMC.
Exactly. So analysts are warning that any future investment in their next step, the 14A node, depends entirely on confirmed customer commitments.
Which they don't have.
Which they don't have. Is why they are the ultimate high-risk, high-reward contrarian play. They're bleeding cash, and they need a technological Hail Mary to land a big customer.
Which brings us to this crucial question that hangs over all three of them. The subsidies are flowing, but can they overcome the huge structural disadvantages of making chips in the U.S.?
That's the core economic hurdle, isn't it? The cost differential is just insane.
We talked about construction costs being 100% higher than Taiwan.
Mostly due to labor, right?
Yeah.
4 to 5 times higher. And even after they're built and you account for all the incentives, the U.S. cost to operate are still 35% higher.
Which means these American fabs have zero margin for error.
None. If your utilization rates, how often the machines are running, and your yield rates, the percentage of perfect chips, don't match Asia, these fabs will be structurally unprofitable forever.
It's like baking. If your ingredients cost twice as much, you can't afford to burn a single cookie.
That's a perfect analogy. And looming over all of it is the people problem.
The workforce crisis.
It is a truly existential risk to the whole strategy. The industry needs another 67,000 skilled workers by 2030. Engineers, technicians.
67,000.
And that's 22% of the total workforce they'll need. Current training programs are they're not sufficient to fill that gap quickly enough.
So to summarize this whole battle, we've got three really divergent paths.
Absolutely. TSMC has the flawless execution and the customer trust. They're making a defensive bet here. Samsung is fighting for credibility, rescued by that one big anchor customer, so they're the recovery play.
And Intel is the high-risk play, bleeding cash and praying for a miracle customer.
That's it. It needs that Hail Mary for its advanced nodes to justify its existence in this race.
And the market view seems to reflect this too. It seems execution beats a patriotic narrative every single time.
It does. Look at the stocks. TSMC is in a clear uptrend tied to AI. Samsung is seen as a volatile value play, totally dependent on HBM and that 2-nanometer ramp.
And Intel?
Intel is the cautionary tale. Consistent selling pressure. The street confirms that money follows proven performance, not just good intentions.
So this whole multi-hundred-billion-dollar reshoring strategy really hinges on bringing these advanced capabilities home. Given all of that, here's a final provocative thought for you to consider.
Okay.
What happens to the entire U.S. CHIPS policy, that foundational goal of a resilient domestic supply chain, if the only American-owned advanced logic manufacturer, Intel, fails to secure a single anchor customer for its cutting-edge nodes by 2027? See you all in the next ProTicker Deep Dive.